Good evening, everybody. Greg McDermott with Cyber Trading University checking in. I'd like to welcome everybody to our short-term FX trading FBC. Glad to have everybody with us. We are going to get going right away. We appreciate, again, you being with us. This being brought to us by our friends at FXCM. We will talk about them a little bit more, but I'm very aware of everyone's time being valuable. We are going to get this presentation moving for you. As we mentioned, FXCM is bringing you this short-term FX trading class. We are going to go through the risk disclaimer. As we know, there's always risk involved. Make sure you please read this. Remember, anything we talk about tonight in particular, want to make sure that we, it's for educational purposes only. Don't want to have anybody out there necessarily trading right off of what we said tonight. Please be careful when trading risk, and I would recommend everybody, before you start trading FX, go visit our friends at FXCM and open up a demo account. The account that I'll be showing you tonight that we'll be looking at is my demo account with FXCM, loaded up with profiles and things, and it's really an unbelievable package through their MetaTrader process. About Cyber Trading University, most of you probably are familiar, but if you're not, CTU has been an educational trading institution since 1995. CTU established itself as a leader first by working directly with the SOEs trading firms by teaching them to day trade. Back in the day, if anyone's old enough to remember, they were originally referred to as SOEs bandits, and those SOEs bandits blazed the trail that allows you and I today to trade from the comfort of wherever we are via computer, laptop, wireless devices, but they sort of blazed the trail. CTU was the first to establish itself as a quality stock market trading school. Each of our instructors, including myself, has a minimum of 6 years of actual trading experience before they begin to work with students. Over the past 14 years, we've taught thousands of students to be successful and profitable traders. CTU's headquarters located in the heart of the trading world in New York. To me, the least exciting part of the whole presentation, me, that is me. Mom loves that picture. But I got my master's degree of applied finance at Macquarie University in Sydney, Australia. I've just been receiving some emails from Macquarie. They're celebrating their 50th anniversary as a university in Australia. I haven't been able to figure out a way to get somebody to pay for me to go back and enjoy that, but not with a family. I got my BS in financial management from St. Joseph's University in 1987, was a crude oil options trader at the New York Mercantile Exchange. I was the head options market maker for JAS Securities at the Philadelphia Stock Exchange, where I managed the portfolio risk for a team of 10 options floor traders, including myself. Was a market maker in the Dell computer options, which Dell today and Dell 20 years ago, completely different animals. Dell back then was the busiest, most heavily traded equity option in the country. Directed an all-floor trading unit for JAS Securities and was qualified by the ISE, the International Securities Exchange, as a DTR. We want to welcome you to this presentation and make sure we let you know that we're going to talk our FX workshop, trading in 2 hours a day. We're going to, on the 21st at 5 o'clock and 8 o'clock, do a real in-depth look at how can you take the limited amount of time everybody has in their day and find a way to make some money trading FX. The beauty of it, and we'll talk about it, is the availability of trading 24 hours a day, 6 days a week. But that's what's going to be. If you want to come back and join us for those, the special price is going to be $159 to join us for those 2 hours. And we're also being brought to you, again, FXCM is deferring a lot of the cost of that workshop. In addition, if you're one of our cyber group members, and you know who you are out there, you're the ones very familiar with my voice, you can join for $99. You do need to reach out to the team in New York. If you're part of the cyber group, this link will not allow you to join for $99. So you can either call back to the offices or email the office, and they'd be happy to set you up with that class. It's going to be, I believe that is a Wednesday. It might be a typo there. It is a Wednesday. It's Wednesday, I believe, May 21st at 5 and 8 p.m. So to confirm that, 5 and 8 p.m. Wednesday, it is May 21st. It'll be $159 for the 2-hour session. $99 if you're part of our cyber trading group. Again, call the team at 516-280-5350 if you're one of the cyber group members and want the discounted rate, or if you want to join and you're not a cyber group member, please also feel free to dial that number. Let's get right into it. Why should you be trading Forex? One of the big reasons is it is the largest financial market in the world. More volume trades in the FX daily than all the other stock exchanges combined. It's a gigantic, deep, liquid market. Easy to profit in up as well as down markets. And this is an important thing to remember. For any of you that come from the world of equity trading, there's a bias or a mindset, some of it market-driven because of the restrictions on short selling, some on just the general psychology of short selling, that makes profiting in a down market can be difficult. Now, there are ways to profit in a down market if you're an equity trader or a futures trader. You can use options. You could possibly short, but being able to short a stock is a difficult thing to do. The requirements for your margin can be really difficult. So the mindset is really, from an equity point of view, if that's where you come to us from, is that up, good, down, bad. Very simple. Well, in the FX market, up, down, it doesn't really matter. It's as simple as hitting the sell button on a currency pair or hitting the buy button on a currency pair to initiate a trade. There's no limitation to the amount of being able to hit a down tick or any of the negative things associated with putting on a short position. So all of the things that you've learned about trading on the upside can equally be applied to downside moves. And I'm sure there are times when you find yourself as an equity trader kind of handcuffed because you feel like it should be a downside move and it sort of limits your ability to profit from those downside moves. Well, no such limitation here in the FX market. You can use the FX trading platforms through FXCM, whether it be their MetaTrader or their what's the name of the other one? It's the digital one, FX. I'll think of it as soon as we move on to the topic. But they have one that's more of a numbers-based, and then the graphics trading-based MetaTrader is the one that I prefer. But you can enter long and short trades very simply. No limitations, no extra cost to your margin, up, down, it really doesn't matter. And what you're doing there is making those decisions based on the movement of the two pairs. The risk management tools and more analytics, now more than ever, particularly with a great platform like the MetaTrader, you have so much available to you. When I was running the trading floor, I wouldn't want to tell you what we used to spend for, thanks, Trading Station, thanks, Al. What we used to spend for analytics on a monthly basis, and this is back in the day when we'd have to leave the machine on overnight, and TradeStation would have to upload all the new information because we were talking about the dial-up days, and it was very primitive, and that cost us a bundle of money. And this is really for free, great entry into FXCM and using MetaTrader. We're going to talk about some of those tools tonight. The ability to kind of insulate yourself from market manipulation and false data. That doesn't mean that data doesn't drive what happens in the FX market, but what it does mean is that it's much more, if not impossible, for a government to go out of its way to consistently feed false data to the markets. Now, I'm sure there's the conspiracy theory people out there who are sort of shaking their head. Trust me, I'm sort of shaking my head a little bit too. I mean, it can happen. What you will see is you can see quick, violent, extreme moves to news that comes out, whether it be employment data in the U.S. the first Friday of the month at 8:30, or any such economic data can really move the market. But that is sent out to the market at the same time, within moments of it being available. There's no whisper number. There's no insiders trading it. There's no real way that you can manipulate and move a ship this big with individual people. The margins available up to 100-to-1 margin. 50-to-1 is what you normally get for places like FXCM. And what does that mean to you? That means that you have to put up 2% of the American US dollar value of the position that you are either long or short. So you can get a 50-to-1 margin. So for example, ballpark numbers, and this isn't really the way they're trading right now, but if you bought what would be called a mini lot, which is 10,000 units of the pound dollar, and let's say the pound dollar cross was trading at a $1.50. It's not, but let's say it was, because that makes my math easier. You would need, that would be a $15,000 position. You'd need to put up 2% of that, or $300. So your margin in your account would be a minimum requirement of $300 to be able to put that trade on. Well, you know, if you needed a standard lot of 100,000 units, well, then all of a sudden you'd need $3,000 to put that trade on. So you can trade with small amounts, you can trade with bigger amounts. Margin is a great thing as long as it's used wisely. You don't want to use it so that you gamble with money and be able to go beyond what your risk tolerance and your money management dictates. But it does allow you to trade in a market where the dollar sizes can be bigger. On that that pound dollar trade we talked about, for example, that at a 10,000 units, you'd be looking at approximately $1 per pip. So if your underlying moves 10 pips up, 10 pips down, you'd make 10 pips, make $10 or lose $10. So again, that's a rounded ballpark number. The intricacies of the exact calculations get slightly off of that, but as a general rule of thumb, that's one of the ways you can look at it. The other thing that I really like about it is when trading equities, it can be very confusing. There are lots and lots and lots. And it's funny when you hear Fausto, and he will talk in the cyber group, and you'll hear him call back to a stock that you've traded, you know, a week ago or 2 weeks ago that you may have had some luck in, and he'll call that back, and it's sort of like an old friend. You sort of have the ability to to get familiar with that particular trade. Well, with 5,000 U.S. equities, it's tough to find friendly faces. But when you're trading currencies, there are really only 6 major U.S. dollar pairs and about 18 major world pairs all in. So the U.S. dollar pairs are pairs like the pound dollar, the euro dollar, the U.S. Canadian, the U.S. Swissy, the Aussie U.S., and the U.S. yen. You also have some pairs like the euro pound. There's some that have a little more Far East Asian market exposure when you're talking about the Aussie dollar versus the yen, the euro versus the yen. You'll see the pound versus the yen. Australia, New Zealand, probably not in the top 18, but does trade a little bit. So you've got pairs that you can get familiar with. And to me, that really helps when learning how to trade. It allows you to focus on a few currency pairs that have plenty of opportunity for profit. And for me, you'll hear me use the term eye, but it helps you develop your eye for a certain currency pair, just like you did with stocks. I mean, I got to the point when trading Dell Computer that, you know, you could almost feel the way the stock was going just by watching, you know, the prints. You just kind of knew the way the underlying moved. And that came from how? Hours and hours and hours and days and weeks and months and years of staring at the ticker and knowing what the stock does in certain areas and support and resistance and all those kind of things. Well, this allows you to focus on a much smaller universe and get more well-versed in it. Plus, there's a big advantage. You can trade when you want, morning, afternoon, or night, depending on what your schedule is. If you're in the East Coast United States and you've got a regular, we'd call it 9-to-5 job, you may say, hey, Greg, I can't quit my job, and we don't want you to. But there's plenty of trading done early in the morning, the middle to the end of the European session before you would go to work, or after hours, as we get ready in the next couple of hours for our the opening of the Asian market. So there's plenty of time to trade when you want to trade. Trade where you want. With deep and accurate markets, they're really just a mouse click away. And you can trade from your iPad. You can trade from your smartphone. I mean, normally when I have trades on, if I have to walk away from my desktop, and that happens a lot if I've got, you know, like a swing trade on that may take, you know, a day or so to kind of come to fruition, you know, I have my iPhone set to, you know, my account, and I can check what's going on. I can update the orders. Again, wherever I am, I'm not locked into my desktop, although that's my preferred method of trading because I've got more screen space. I've got more availability at my fingertips. I prefer that, but that doesn't mean I have to, once I walk away from my computer, cross my fingers and hope because of the availability of technology. Trade how you want. With extensive charting package and news services, you can find out what kind of trader you are. Are you somebody who likes to trade, long-term over, again, as a trader, long-term to me is a couple of days. But, if you want to trade over a couple of days or a week, is that your style? For a while here at CTU, we were talking about a little bit longer swing trading-ish, trying to maybe get 50 to 80 to 100 pips in a trade. And I spoke to one of the guys back in the office, and I told him that we were sort of looking at, hey, how can we show people the availability of trading on a shorter term basis? Maybe being able to, do more trades in a day, shorter term, maybe trying to make smaller pips over and over again. And he sort of turned and laughed. He's like, oh, Greg, thank goodness, he said, because, I can't just sit here and stare at the screen all day. Like, I got to do something. And again, I understand that mentality. You do have to be careful that you don't want to do trades just to do trades. And trust me, I've done more of those dumb, gosh, I wish I had just kept my fingers in my on the sidelines. I kept my hands in my pocket, had not yelled buy them or sold on the floor, or hadn't clicked my mouse to get into a trade. And the reason I did it probably was more because I was bored. It's a bad thing and it's a hard thing to get over. But if you can find a methodology that works for you, that short-term trading, absolutely, that we're going to talk about tonight, can work. It absolutely is a way. If you don't care at the end of a week how you make 200 pips, who cares if it was 2 trades for 100 or it was, 20 trades for 10? You're still getting to the same point. And you really have to know yourself what fits your style. Because, for me, I go back and forth and you do find yourself, and I'll admit it, you find times when you haven't done a trade in a while and you get a little itchy and you're kind of pushing for it. It's hard to get over. But we're going to talk about that and how can you line up the odds in your favor. And as I mentioned earlier, at least for the moment, there's no need to quit your job. Just not yet. But hopefully, maybe someday, some of you, that's your goal, and you find a way to replace your income. That would be fantastic. We'd love to wish that up for anybody who would like to do that. Here's what I noted earlier. The major Forex market hours. London, again, all the times are based East Coast U.S. as sort of a, well, we're biased because that's where we are. You can make any sort of adjustments that you want. But what you notice is that London opens as Tokyo's closing. New York opens midway through the London session. New York stretches till about 4 o'clock in the afternoon, 5 o'clock in the afternoon, which is a bit of a stretch. Sydney's beginning to open now. Their stock market is open. And then Tokyo will jump online about 7. You usually see more of the Asian market after about 8 o'clock at night. Everybody kind of jumps back into the fray. But there's plenty of opportunity. And in fact, if you find yourself being somebody that says, hey, Greg, I'm a night person. I work in the East Coast, and I really want to focus on the Asian market. Well, then you probably should take the time to focus on, okay, let me look at the Japanese yen pairs, maybe the Australian, New Zealand pairs that are probably going to trade more active with local traders as the way that you want to build sort of your trading platform, your trading your trading strategy. Then we've got, where do you find the news? So everybody's always looking for, how can I make trading decisions? Should I just use the charts? Should I just use the news? How can the news affect what happens in the charts? And we're going to show you all of those things. And what you'll find from me is there's no magic here. There's no black box. This is just like any sort of skill or trade you want to learn. It takes time, and it doesn't happen overnight. If you find someone out there in the internet that tells you that they always have winners and they never lose and they can show you how to make money that way, they're lying to you. They just are. And it's not what we do here. We're about solid education. And we're going to tell you that there are things you can do to shift the odds in your favor. But, you're going to take losses. I mean, I'm looking at all the attendees on this list, and I'm quite confident in saying that over my trading career, I've taken more losses than the entire group of you on this call tonight. And what's that mean? You can learn from my mistakes. I've made lots of them. Still here to talk about it. Still had a very successful trading career, but I can help you get over some of those things. And one of the things to do is, hey, where's the news? If you join me on the cyber trading calls in the morning, we talk about what's going on, what might impact. If you're trading in equity, most times the only thing that's going to impact you is, when their earnings come out. That's once a quarter. It's like a big giant, gong banging. We know when that's coming. Everybody knows when that's coming. But with the FX market, there's things that can impact you much more, in line for FX markets. So here, if we take a look, I like to go to the Forex Factory. Again, I don't have any affiliation with them. It's just a good site. They bring you the market news that's coming. If you look at this here, you'll see that this is a screenshot of, what time can you expect this news to be released? If it's economic data, what sort of forecasted numbers, what was the previous impact, and what country does it impact? It's all color-coded, red being hot, yellow being a little not as important. They list bank holidays and those sort of things. We also get, if you click on the detail icon in FXCM, you can get, not FXCM, Forex Factory, you can find out what are the details about this news event. How impactful has it been in the past? What do we expect to see in this one? So more details about what's going on around the world for each of these economic indicators. You can also get prior release volatilities. Look for the scale equate to average greater than 1. Priors do not guarantee future. So you can see what has the impact been of this in the past. What sort of movement have we seen to help you plan your day and plan your trading strategy? By the way, someone asked if I don't trade FX anymore. No, I do trade FX, but I don't trade equities anymore. The trade ideas. This is another list of the live accounts that are associated with traders on FXCM. What are their positions currently, long or short? And it lists all of them. Again, it doesn't mean that if everybody is, in this case, when we took this screenshot, everybody was, 2/3 of the people were short the euro. That means you should go, blazing out there and start selling the euro just because of that idea. The reason you should look at this is more information is helpful. Know what's going on. Make sure you're not missing something. I would always be one of those guys in the trading floor when if somebody came in and I saw something and it looked like way too good, my initial reaction wasn't, hey, let me do this trade. My initial reaction was, what the heck am I missing? And again, you want to know if, let's say, for example, in this example that we show here, let's say you thought, hey, I want to get long the pound dollar. And you look at one thing, one indicator, and it says get long. And then you go look at this and you say, wow, 70% of the traders, and that's, 400 traders are trading now, and 70% of them are short. That doesn't mean that 70% of them are right, but what it would tell me is, hey, I want to look and make sure that I'm on this. Honestly, a lot of times, being on the opposite side of the crowd, to me, is the better trade. I don't necessarily want to be with the 70%, but I sure as heck want to know what they're doing. So it would give me pause, make me take a moment, see what's going on. Again, all this available for free on forexfactory.com. And I said before, we don't have any affiliation. I like the site. For me, it's really good information. Now let's move out of this and go towards charting. In particular, we're going to look at charting for short term. And there's a couple things we're going to focus on because of that are going to be a little bit different than what you might expect. I'm trying to focus in on how can we find short-term opportunities in the trading market. First, we're going to talk about using the candlestick charts. That's the way I prefer to look at charts. I prefer the candlesticks. For me, they really give me that visual look that I really need. Sorry, guys, I had to take a drink there. I'm not used to, well, actually, I am used to talking without taking a breath, as most of you who've heard me are familiar with. But on a candlestick chart, it helps me from that idea, and I mentioned it earlier, about developing my eye so I can look at things and kind of take in information visually. I'm sure there's some people out there who, feel themselves visual learners. That's why something like a candlestick would really help you. You've got the opening, on one bar, you can see the opening price, the closing price, the high price, and the low price. Here it is visually, and if we take our handy-dandy pen, you can look at, when we dial this in here, you've got, for example, if you look at, let's just look at this long bar right here. I'm drawing a little spot here and a little spot here. We try to get a thinner pen so it's a little easier to see. But those the ends of that are the high and the low for that move. Here's the opening price, because that's where the green begins, because green is an up bar on this chart. And then the red is a down bar. The red would be a down bar. Let me just dial this in for you a little closer. So that's what it looks like. And the next page, if I can find my, here it is blown up so we can see. In this chart, I have the reds are the down, the greens are the up. So in this case, for example, this red one here, here's the low, here's the high. We know that it opened at this point because it's a red bar, which meant the close has to be below the open, so we know it closed there. But the next bar, here's the low, here's our open, there's our close, and there's our high. So a lot of information piled into one bar. So again, now this is a 1 hour chart, and as you move the charts up and down, whether they be a daily, weekly, monthly, 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, the information within the bar is still the same. You just have to make sure you pay attention to the time frame that you're dealing with. Also like to use, when I'm doing this within the bars, the moving averages. Moving average, what is it? A smooth line connecting the points on a chart, calculated by a simple moving average for the prices in a specific period. A lot of times people will use 50 period or day moving averages, 200 day or period, depending on the chart time frame. These points can be the building of your support or resistance areas. So these can be levels that you want to see your underlying move above or below, use as support or resistance, not necessarily only support or resistance, but one of the factors that goes into a support or resistance area. Now here's a moving average on that chart we just looked at, and as you can see, I'm going to even go to the bigger one. Here is the line, and that green gives you an indication, and we move down. We're below the moving average, above the moving average. So that line gives us, and this is I believe this is a 20 period moving average. I believe that's from this chart. I'm pretty sure. So that's the 20 period, and this one is coded so that when we see up momentum, it goes green. When we see it sort of sideways, we get a yellow. So again, adding to our visualization, it allows us to take a look and see, have we moved above or below our moving average? Where are we in relation to the moving average? I mean, for example, you can see that here, let me take this out and make it a little clearer for you. If you look at this, I'm not saying this is necessarily a divergence, because we'll talk about divergence in a little bit, but you can see that as we got this moving average here, we are trading up here, and there's a huge difference between our moving average. And you would think that these two, as one of the things you would look at, should come back somewhere towards closer, being that the numbers feeding here are putting this point on the chart, and as we're going back 20 periods, eventually this has to catch up. Same idea here. We're significantly away from that. The idea that you get a move back towards the moving average is just one of the things you look at, not an absolute, not the only thing you would see, But one of the things to consider when you get going through this sort of visualization of what you're seeing on the charts. Now let's talk about support and resistance. I touched on it a moment ago, but support is an established area where buyers have demonstrated that they are very willing to buy. Sometimes I think people, traders, get mesmerized by the screens, and they get very caught up in the number and the blinking screens and their mouse, and what they forget is, at its core, markets are made up of people. And you'll say, well, yes, but Greg, now we've got black boxes and smart trading algorithms, and all those things are true. But there still are people involved in the trading. And when you look at a support area or when you see a resistance area, you have to realize that whether it be an algorithm or a person, the buyers have shown up. And the law of supply and demand has once again reaffirmed its dominance on the world. When you get to an area where you found support and the support holds, what's that mean? That means that at this level, for whatever reason, and I'm not going to go into why there might be support or resistance at a specific level, but let's just say there is, for that moment, at that time, on that chart, you found support or resistance. You found more buyers if you found support than sellers, or more sellers than buyers if you have a resistance area. So you have to make sure that you remember that. Those areas matter. I remember back, 20 years ago, to be a chart guy, you used to literally get your charts, you would get them mailed to you, and you'd have them Monday, and then you would have to fill in the charts yourself, and then the manufacturer for the one charting package people used, you would get every week, you would get them. So you'd have to chart it yourself. And back then, there would be like, guys would be like, charts, you guys are crazy. Charts, there's nothing there. That's all hocus pocus. Well, the reality is that on some level, whether you believe in charting or not, you can argue a self-fulfilling prophecy where the fact that everybody believes because of a chart that this level is support or this level is resistance brings some truth to that idea, whether you necessarily believe it or not. And to me, I want to know what other people think and when I'm making decisions. And these areas of support and resistance really are the building blocks for how you go about developing a charting expertise. Support and resistance are the key technical analysis term. They're the equilibrium at where supply and demand is the equilibrium at these junctures. Supply or demand exhausts and prices reverse. So if the buyers outweigh the sellers on support, the underlying moves back up, the sellers retreat. It's truly the basic building block of price structure. As the markets move, they move by charts, and they move by points on a chart, and they're not just numbers. And crazy things like, wow, it's the underlying's trading up against, we ran up against it last week? I think it was last week in the pound dollar, where it got up near the 1.7000 number. And those sort of figures, the 4-digit, the 30 numbers, they matter. There's a natural support or resistance depending on which way you're approaching them. Now that doesn't mean they always hold, but we had it happen, and maybe we'll look at the chart before we're done. We had it happen where there was got up to almost that 1.7000 level, and it became an opportunity at that point to get short. If we look at the chart, we'll see that it was more of an opportunity. It was a golden opportunity. Pardon me. But the fact that you had a figure and some other things led to the point where it kind of looked like it was an opportunity to get short. Doesn't mean 1.7000 is going to hold forever, but it looks like it's held the most recent time it went there. Trend lines are the key price structure points that are the basis for drawing trend lines. You want pivot highs and pivot lows are great places to draw trend lines. You can also find support and resistance zones. So instead of it being a specific tight range, you may find a wider range or a zone. Could, depending on your chart style, and we'll look at those, it could be over the last couple days, couple weeks, couple months, you could find that an underlying pair trades within a certain band of X number of pips up and down. Kind of just floats inside there, hasn't broken out of there. Have to know that if you're trying to trade it as to where you are in that zone, and you don't sure as heck don't want to be getting short at the bottom or long at the top if there's been a history of reversal on those levels. Now let's talk about short-term FX trading. In the MetaTrader profiles, you can build these profiles yourself. This is one that I use, and it's a short-term. The pink is a 15-minute chart. The gray is a 5-minute chart, and the green is a 1-minute chart. And I use these for that graphic representation. I want to look at these closely and say, hey, do I see anything here? As I'm going through the charts, does anything catch my eye that would then cause me to dial in and say, hey, I want to take a further look at this pair or that pair on this time frame or that time frame. So building these profiles really, to me, is very, very helpful. I have a couple that I built recently that are a little bit more geared towards the short-term trading. We're going to talk about some of the indicators, and I find them very useful, and I really suggest you use those when trying to build these, this trading platform for yourself. You also need to think about order types when putting in FX options. Most important one you're going to do, even more than your opening order, is your OCO, or one cancels the other order. Depending on your platform, you may be able to open a trade with a buy or a sell, either a market or a limit, and combine that with an OCO. What is an OCO? Normally, almost all the time it's a combination of a stop order and a limit order. What am I doing? I'm putting in the level at which I'm willing to exit the trade because I was wrong and I'm stopped out, and also put in at the same time the level at which I'm looking to take profits. I don't mind if you fiddle with the profit target. That's fine. I don't really like once you've picked a level for your stop. I'd prefer, not a good idea to start moving those around. And the beauty of the OCO is that once one of these pieces trades, the other's just canceled. So you don't have to remember to cancel it, because if you do it individually, let's say you put in a buy order, you put a stop and a limit in, you're wrong. Or let's say you're right, it goes your favor, and you take profit at the level you want to take profit in. If it wasn't an OCO order, pardon me, that stop order is still out there. And Murphy's Law says the underlying will reverse, and you will then have to, you'll end up with an order, a position that you didn't want. So the OCO allows you to make sure that you don't get two executions trying to exit one trade. Really like this as a way to manage the active spot market, particularly if you're putting in orders, real short term, with news events and things. You really need to make sure you have both of them so that you don't get whipsawed and get put into a position going against you that you really didn't want. Trailing stops I also find to be very helpful, particularly when you get a trade that is in profit. This is a screenshot of the MetaTrader, and you can set a trailing stop. What's a trailing stop? It's a stop order that will follow and adjust its price level based on the movement of the underlying at a level that you pick. Greg, what's that mean in English? What that means in English is, and you can see it here, you've got, for example, in MetaTrader, you can set a trailing stop at 15 pips, 20 pips, 25, 50, or even, I believe if I go to my next screen, I think I have the next one where I showed, yeah, I mean, you can modify it. I mean, as an example, showed a 200 pip moving stop, a trailing stop here. And what that does is, 200 is a bad example, but I just used it to show you that. If you had a 20 pip trailing stop, the underlying moves up 10 pips, your stop will move up 10 pips. If your underlying then moves down 10 pips back towards your stop will not move. So that when the market moves and then reverses, you can kind of capture profit with the market, but be able to get stopped out if you get reversed. So I find them very helpful, particularly if you have to move away from a trade. If you have to, let's say it's an overnight trade, you're going to sleep, or you've got a position that you're going to be out of the office and you need to you're not going to have the ability to really watch it as tightly as you may like. Well, a trailing stop will allow you to kind of participate in a move your way. You can determine exactly what your max loss is, and then unless it was a trade you kept over the weekend where the trailing stop wouldn't really be as big a help, you can prevent yourself from getting a huge loss, but can still participate in an upside move. The other thing I like about FXCM's Trader when you're a short-term trader is that you can grab, these are the entry lines for your stop and your limit. You can grab those and just move them, grab them and pull this up to here, grab this one, drag it down to here, and it will recognize, you'll hear a real loud plop, and you'll hear that the trade has been moved, and it'll tell you exactly how many pips can you make or lose, and it'll tell you what the profit is. Now again, remember that when you're getting this, you're getting, the pips there are really only 75.6 for those of you who are trying to pay attention to that. That extra decimal point sometimes throws people off. And here again, you also can right-click and modify any of the trades. So in an active market trading short-term, this MetaTrader account is really, really helpful. We're going to go look at a couple of indicators live in my FXCM trading account. I'm going to give you an idea of the AC, the accelerator oscillator, the ADX, and fractals. Let me share my desktop, unless I can share an application. FXCM MetaTrader, that's what we want to share. Okay, everybody should be able to see this. Now, this is a newer profile that I have. You'll see that I have a daily, a 4-hour, a 1-hour, a 15-minute, a 5-minute, and a 1-minute. I haven't put some of the indicators on the 1-minute because honestly, some of them are just too super sensitive to worry about. Pardon me. So looking at these, let me show you what we're looking at. In fact, this is an example. This red line here, you see the vertical going all the way up, was from like 2 Sundays ago. And I had this chart set up, and I had a short sell kind of building. And now this is a daily chart, again, so just as a frame of reference. So on this line here, we had a couple of down red bars. My AC, the accelerator oscillator, had turned negative and was setting up for a down. We had also, if you look back here, my the ADX had crossed or was beginning to cross over in at this period, so it was starting to look like a short-term trade. Now I'm going to go live and look at a 4-hour, and we'll get a little bit more indication. I'm pretty sure this is back to that day. I left this line on here. Here's that same day, but when you dialed into the 4-hour, we had the AC, which is an oscillator, showing negative, and we were just about getting this crossover. I could see the crossover coming on the ADX, so I was starting to look at it as a short-term trade. And then again, we got even a little closer. I don't know if I left this. The 1-hour chart probably does not have. Oh wait, I did leave it on there. Good. Here's what that looked like. The same day, same time, was 2 Sunday nights ago. We had a negative accelerator oscillator, and even more divergence on a 1-hour between our red and green on the ADX. So with the black line over 30, this was looking like a short. So let me put the chart shift back on so the chart moves. So this is one of those things that I looked at and was saying, okay, it looks like I have a short. They're kind of all lining up, more than one. And in general, if I find like a short or a long opportunity, I really like to look at the other charts, dialing it down to a shorter term and looking at this right now on a 15-minute. Again, this is live dollar-yen. We've got a crossover from our, let me give you the line so you can see them. We've got a crossover down here on the ADX, although the differential is really only about 20. We'd like to see it about 30. That might move our way. I would anticipate we're going to see a negative AC as we had seen previously. I'm thinking when we get our next chart paint in here, which will be in about 15 minutes, it'll paint this next bar in. We probably will see that's next. By the time we get off, we'll see this chart paint. We have the it looking kind of negative on a 15-minute chart, and if you look at this on a 5-minute chart, again dialing it in even more, again very negative on the ADX indicator. And what I'm looking at here is I would start looking at the pivot points we've got here. If we start taking out this pivot or even this pivot, clearly looking like a down move with a stop that wouldn't have to be more than, it's probably a little tight on the stop. It's only 5 or 6 pips below. Probably like to find a little bit higher pip. But what I'm doing is I'm looking at bigger to smaller, trying to find short-term opportunities. Now, if you look at this 1-minute chart, again, 1-minute charts will make you crazy. I'll be the first to admit that. But this will show you that what's happening minute by minute. I like the 5 and the 15-minute. This is sort of balanced out. If you look at the 15-minute, it's kind of slow. Let's look at, let's drop in the fractals as another thing to look at. And these are all available on your, make sure that this is thick. Fractals are another version of a pivot point. And what you're looking for here is, we would want to take the closest fractal on this one. We'd have to, let me zoom this in a little bit so we can see it. Just wait for the chart to shift. There it is. As you can see, this is the down fractal over here. You'd normally want to see, if you're going to trade off of this, you would normally want to see this down follow through within about 3 to 5 or 6 bars. We don't see that here, so this probably isn't really. What you may see is with these 2 up fractals, if we got a reversal here in the next few bars, crossed over this fractal point, you'd then probably be looking at it up. But again, you don't want to trade on just one indicator, one idea. It's look at all of them, try to get a general consensus of what you like. Let me take a look. I think there are, this 4-hour chart has the fractals on it already. Wait till this thing shifts. You'll see that this down fractal here, we've got 1, 2, 3, 4. This 4th bar took out the low on this fractal. To me, that's a negative in the market. Plus, we have the downs on the AC, and again, not as big a divergence as we may like, but we've got a red over green, looking like a negative in this one. So, for those of you who want to find these, if you go to your MetaTrader, you hit indicators. These are all standard indicators that come with MetaTrader. The one is the accelerator oscillator. That's these bars here, the green and red. The lines are on this latest version. It's called the Average Differential Movement Index, the ADX. And then, as I showed you, if you want to find the fractals, they're under Bill Williams. You can hit the fractals. Again, there's just dozens of these. You have to figure out which work best for you, which you understand, which fit your eye, as we talked about earlier. But all of these help you when looking to make short-term trades. In particular, the oscillators, and again, on a very short-term trade, if you dropped in the fractals, you could see, let me drop it in here just to show you. Insert Bill Williams. And if we zoom this one in, when it shifts, again, on this short term, this one's really, although this bar is now coming back up, you had this one here, a down fractal, 1, 2, 3, 4, 5, 6, and we broke it, but we haven't held that. So on a very short term, this may or may not be. You'd want to see where this bar closes to see whether we stay in this downtrend. If you wanted to short it, you probably want to do it against a very tight stop against the pivot high from that fractal. So using these kind of build a case for yourself as to what should be the trade that you want to enter, whether it be long or short. Let's also talk about short term with the movement below the calm. If I showed you guys this 4-hour chart, you'd say, well, Greg, I mean, no big deal, nothing going on there. There's no money to be made on that 4-hour chart. But what if I showed you that 4-hour chart, but it's now over that same time period, a 1-hour chart? Well, now you're saying, okay, well, Greg, there's a little bit of movement there. Maybe there was a couple of pips we could have possibly made. And what if we dialed it into a shorter term and said, man, what's the 5-minute look like? And the 5-minute chart, if you look at these numbers down here, we took a little bit of a highlight, but just from here to here, and that's about an hour or so, it went from 1.0960 to 1.0997. So that's a 31 pip, is it 90? 37 pip move from here, high to low. Back down to here again is probably another 20, and you probably have 15 here. Now, I'm not telling you that I or anybody on this call is going to trade by buying the bottom and selling the top and buying the bottom and selling the top. Anyone who tells you they did that, they're lying to you, and I wouldn't do that. I mean, what I would tell you is if you were trading this, there was opportunity in this area to make some trades, and there was opportunity here to be short and a little bit long and a little bit long and maybe a little short in here. Again, you're not going to do it and take every single pip out of a trade, but there's opportunity in a place where on the 4-hour chart, it looked like nothing happened. If you look at it even closer, this is the 1-minute chart. Again, I told you how 1-minute charts can make you crazy, but look at those moves down, moves up. To get that same time frame, and I need to go through 2 charts to make it all match. But there's ups and downs, peaks and valleys. There's 10 or 15 pips laying on this chart all over the place. And again, you can get the 50 pips any way you want, whether it's 50 one time or 10 5 times, all the same amount, and it doesn't really matter. You have to find out, what's best for you and your trading style and your capital. You can even, although I don't know, it would get crazy, but you can even use things like a Fibonacci on the 5-minute. And when we threw it on this chart, you can see it. If you went to the low and then we got up back near 50, and then we came back down through these numbers and traded back up to the 38, and then traded back up to 50. We hit those Fibonacci's. Again, I'm not telling you they always do that, but you can use those skills that you've learned with the Fibonacci's and other things on charts as short as 5 minutes. Again, like I said, you want to apply the same trading strategies that you use for equities, options, and futures. Focus on a very short time frame. You want to actively manage these positions: tight stops, quick profits, OCOs, and trailing stops. Again, it's difficult, although not impossible, to go broke taking profits. Now, you'll kick yourself, but you kick yourself a lot less if you take profits and leave a little on the table than if you watch it all go against you. And that can and does happen. Trust me, I know. Like I was saying, pips are pips. You want to make 100 pips in 2 days? It's the same as making 10 pips 10 times in 2 days. Trading more often, trading this shorter term is a great way, and particularly with your paper trading account. It's a great way to build your confidence and improve your eye for the pairs that you're trading. I want to talk to you about a trade that shows up every once in a while. It's a short-term trade for the end of the week, and it comes about for a very simple reason. We want to look for an actively traded pair that's made a strong move over the past week, up or down. And why are we doing this? Because the market only closes Friday afternoon in the New York time zone and opens up again on Sunday. Up until then, you can ride profits, or hopefully not losses, but you could ride profits for an extended period of time while having all of your stops in place without a lot of excess danger. But as you approach the end of the week, it's a lot more risky to take a position and leave it out over the weekend because of all the news that can come out, the fact that your stops really aren't as effective as you may believe they are when the market is closed and reopened. So what happens? Traders who've made money will naturally look to take profits as the market moves towards the close. Same thing happens in the equity markets. How many times do you hear about the broad indices or individual stocks reversing at the end of the day? The sellers taking a stock down and then the buyers getting a little bit of control at the end of the day, reversing it, and with the sellers taking profits and the buyers trying to get out. Or Stocks traded up on the day, gives back some at the end of the day because people have done some profit taking. We want to look for the same thing. The trade should set up in the morning of the New York trading session. And you're looking for something that's traded strong and up or down over the past week or so. This is an example of a yen trade from, I don't know, back in March, I think it was. But if you look at it, we were significantly up for 6 days in a row. This red bar right there ends up being the day we ended up trading it when I did the look at it. But you're looking for just the natural reversal you see on days or moves like this. And here's what happened. When we did this, you looked for a while, this thing traded up. This was the morning, kind of trading up, really not a lot going on. And then we got the sell-off that we were looking for on the yen. And here it is again on an hourly. You see that same sell-off at the end of the week where it sort of sat, particularly if it sits after the move and sort of lingers around the highs, doesn't really want to go. And here it is on the 15-minute. You can see the precipitous move down over about 4 or 5, 6 hours at the end of the week. And then there it is on a 5-minute, the same sort of thing. And 1 minute gets obviously to the extreme. There it is. You had to take, again, 2 charts to get that in. This trade simply benefits from the natural ebb and flow of all trading markets. It's the people behind the screens. And we can't forget that markets are made up of people. Similar to price reversal you may see at the end of the closing day for trading. You want to make sure you use a very tight stop, and you want to make sure that you're watching this one, because you may pick a target area and you kind of have to look. If this thing makes a reversal and goes down, you may have to look for the moment when it feels like it runs out of steam, take your profits, get out of the way, and end your trading day or your trading week on a nice win. I want to quickly show you before we get done 2 other indicators we have that you guys can email in the team at or call the team at CTU. We'll be happy to send them to you. I want to share my application. We talked earlier about pivot points. Let me give you a different chart just so we're not looking at the same one. Let's take a look at the euro pound. I've got a little rooting interest in this one, shall we say. Where is it trading? 181.65, pretty unchanged. But let's take a look at, say, the 5-minute chart. And you'll notice, let me zoom it for you. These pivot points here, the blue pivot points, they're a custom indicator that we have. Again, you guys can get a copy. We'll be happy to send them to you. But you use these as the same sort of levels for support and resistance as you would those fractals we mentioned earlier. You look for places where have we taken out, for example, right now, I'd be looking at on a reversal here, have we taken out, do we take out this pivot high? And it's also a place where if I was going to look for a place, let's say I wanted to get short here. I don't know if I would, but let's just say I would. I'd probably look and say, okay, that's not a very high, it's only 3 or 4 pips on a 5-minute chart. Let me give you the 15-minute chart, give you a little bit more depth and breadth. Yeah, this will work out better. Come on, chart, tick. Just wait, it'll tick. Please tick. Okay. As you can see over here, the pivots drop in, for example, right here. If I was looking for, let's say I wanted to get long, I would say, okay, well, that's only 6 pips down. That's probably not deep enough. How deep is this one? Well, that's 21 pips to the downside. And let's just look at this and say, okay, well, what if I wanted to take out this pivot high? Well, that's only about 14 pips. So, but it's the areas first where I would look for support and second where I would look for confirmation. So let's say I wanted to get long. To be honest, I don't. I would probably want to get short here. But let's just say I wanted to get long. I would try to find a stop, and one of the things I would use would be these support and resistance levels, and I would also use the pivots. I drop this pivot in here, maybe this one at 21 pips, and then I would look for the opportunity to enter the trade after we've taken out this previous high, once we sort of confirm that we're going above this or below this. Or if I wanted to get short, I might look and say, when have I taken out this, when do I take out this low maybe I get short once I take out this low and then look to try to make a move to the downside. So these pivots give you areas of support and resistance. The other thing we have, let me put in the other one, is the CTU bands. I'm going to change this to black just so I can, you can see it a little bit better. These are a modified version of the Bollinger Bands. Let me try to make them a little darker for you. Make this darker, darker, darker. That should be able to see it a little better. Let me zoom in a little bit more. And what we're looking for, well, that's a little too tight. What we're looking for here is the play outside of, wait for it to click. Just give me a second. It'll, come on, tick, market, tick. Man, this thing is nothing trading, so it's really quiet. Well, here's what we're looking for. The bands give you a tight view of the market. And what we're trying to find are areas where we cross outside of the band. So in this area here, we would have maybe been able to take the opportunity to, right here, as we, maybe even here as we broke out through the bands, get long, right up here, and then as we break down through, we look to get out. So we're looking for the opportunities outside of the bands. This red, it's a short as we broke outside. The difference being between this and the regular Bollinger Bands is the standard deviation between these and the standard deviation between these and the regular Bollinger Bands. This is only a 0.8 standard deviation. And so we're trying to play the outside. Look for the move to go outside as an indication of when you should get in, and a move back inside the bands, back towards its mean, towards its average, would be the opportunity to get out of the trade. So those are the CTU pivots and the CTU bands, both available for free for joining us tonight. No problem at all. We'll be happy to send them to you. Please call. The other offer we have for tonight, for all of you that may be able to join us, is for $29, you can join our cyber group. Open every morning, opens at 8 o'clock. I usually get on at 8:30 for 15 minutes or so. You've got live trading all day long. You can watch the screens of our traders. And for $29, you can get, I believe it's a 10 trading days, so 2 trading weeks, live look to see if cyber trading is right for you. And the best way to learn how to trade is to watch people who know what they're doing. Being able to sit on the sidelines with a demo account, watch what we do, try to mimic what we do is a great way. And for $29, you're not going to find any better way to spend your money. And there it is. You can register at online, $29 to trade for 10 days. So I'd encourage all of you, if you're serious about becoming a better trader, want to learn about equities in particular, Fausto's a master at trading the equities. You get to sit and watch him trade all day long. You get to hear me jump in the morning and talk a little FX, get you off to the races as you begin your trading day. A fantastic opportunity, and for $29, you can't go wrong getting involved. All of these things available on our website, www.cybertradinguniversity.com. If you want to follow this specific link, it's obviously shop/cybergroup-pro-trial/. All available to you for joining us tonight. We really appreciate you being here. The best part, again, you're not trading alone. You have access to the archives. You get meetings every day, alerts in the chat room, mobile access via Omnovia, everything you could want to see how great it is for $29. Again, there it is. It's that picture my mom loves so much. Again, if you need me, Greg M. at cybertradinguniversity.com. We will be happy to get you anything that you need. And remember, register for next week's short-term FX trading. We're going to do this webinar again, and then on Wednesday, the 21st, we're going to have the 2-hour trading workshop, $159 for new members, $99 for our cyber group. So all these things available if you want the deck of the PowerPoints that we just went over. If you have any questions at all, please reach out to our team at Cyber Trading University, 516-280-5350. Again, all this brought to you by our friends at FXCM. They put the grant together that allows us to bring these free webinars to you, bring these workshops to you at a discounted price. Anything you need, feel free to reach out to us. We're always available to answer your questions. This is Greg McDermott for Cyber Trading University signing off. Everybody have a great evening.